My name is Nick B, and let's get into this week's futures overview, starting with the Forex Factory Economic Calendar. Monday, we have Flash Manufacturing PMI at 9:45 a.m. EST. Tuesday, Consumer Confidence at 10 a.m. is the red label news. Wednesday, we have, no red label news, but new home sales and crude oil inventories at 10 a.m., 10:30 a.m. Thursday, final GDP and unemployment claims at 8:30 a.m., as well as Fed Chair Powell speaks at 9:20 a.m. So that's Thursday. Thursday's going to be interesting. Then we have pending home sales, Treasury, Secretary Yellen speaks. Friday, we end the week off with core PCE price index at 8:30 a.m., 10 a.m. revised consumer sentiment report. Okay, so it's kind of going to be a busy end to this week, but let's turn to the price action. Let's take a look at what's been happening. What's it telling us? Is it up, down? What's going on here right now? So right away, starting with a yes, right? On the daily, I guess we'll cover this in a second, but this is still bullish. And the best thing is we're above the 200 day, we're above the 100, the 50, and the 20 day on the daily. So definitely this is picking up to be bullish. We were stuck for a few weeks between 20,000, excuse me, I'm thinking about NQ. We were stuck between 5670 and 53. Can't see 5390 on ES for a few weeks until finally we've shown that we've created a higher high and a higher low, making it out of this correction territory. And what just happened over the last few days was we finally broke out. We rolled over with our contracts. We broke out above 5670. We held above it, and that's our new support in terms of going higher. And you could see price had no problem shooting up to the all-time highs, 5721, broke out of there, made new highs at 5797, right below 5800, and now currently we're sitting at 57.58. So for this week, what I would keep an eye on, what I will, is if we end up at any point below 56.70, I would be looking at the possibility of price pulling back down to maybe 5600. I feel as though that would be fair after the push and the squeeze that we've had leading up to the FOMC statement day. It's only fair we retest those supports. In terms of upside, let's say we don't look back. Let's say we use 5670 as that support for this week. Anything above 5800, you're looking at a breakout, and so resumes how we target the all-time highs on ES: 5800, 5820, 5840, 5850 is going to be the middle ground guide. As long as ES is below it, it'll kind of hover between 5800 and 5850. Above 5850, it can resume to 5860, 5880, and now the new price level up ahead you can see is 5900, and that's going to be a very real possibility. Now, is that what's going to happen into the end of September? Maybe. ES is quite in the lead. I mean, it's making new all-time highs. It's definitely kind of outpacing NQ in comparison. But that's what I'm looking at. If I break this down to the 4-hour, let's see, what does it tell me? It doesn't tell me anything different from the daily. Just that we broke out of a new higher high, made new higher highs, higher lows, and now we made a higher high at 57.97. If I wanted to put it in on a smaller scale, I could use this wick from Friday at 57. Gosh, my eyesight's terrible. 57.30. 33, 57.33, and then 57.97 is technically that intraday floor you're in between. So if we get a break below 57.33, you can assume 57.20, 5700 down to 56.70 as the support to the downside on ES. And then again, if we prove to hold on the 20 day of 57.37, for more upside, again, your safe breakout is 57.97, 5800. That's your safe breakout there in terms of upside. And that's it really with ES. I would cover more downside. I know there's quite some noise out there. I've been seeing it on a pullback down in September, and I don't disagree. It's very possible, but rather, the question is, when does it happen? So if and when we break below 5670, maybe we can start looking at the possibilities of us working our way down to 5650, 5630, 5630, 5600. Again, 5600 is a similar 20-day EMA on the daily. And then again, if we break below 5600, okay, we can talk about, 50, 55, 50, 55, 40 being your first support. Below that, you're coming down towards 50, 5500, 5490 again. But I'm not going to hold on to that because A, we are ways away. We've kind of grinded out of that area. At best, maybe a quick blip down there, but I'm not going to hang on to that. Again, I got to be open to the possibility that, hey, we just take off and we don't look back here either. So that's with ES. Let's go on over to NQ and let me clear this up. So same thing, NQ, pull it up on the daily. Again, bullish for now. We're above the 20-day. We're above the 50, the 100. Um, we're looking good, and we did a similar move as ES, except we're not at 20,983. We're kind of still at the beginning stage of our earlier breakout of last week, and that was at 20,030 on NQ. Oops. So the first thing that stands out to me is the fact that we just broke out of a higher high, and that was 20,030. Now, 20,030, man, that level did me dirty last week, but that's okay. Let's see, we are still slightly below it, and if NQ continues to stay below that breakout area, then we're very susceptible, very prone to possibly coming down to, man, this is rough, but I'm going to base it off the 20-day EMA as the middle ground level. I would say 19,500, 19,450. I'm basing it off of my 20-day EMA on the daily. It's very possible. This was a pretty sharp, dramatic spike up to the upside on the daily for NQ. Yet, how often do those sharp spikes last? Unless, we're followed by a continuation to the next day, which we didn't. We pulled back a bit and we closed on a little bit of neutral ground. So I would tread very carefully here. But as long as NQ stays above 20,030, you now are exposed to the previous lower highs that led us into the correction territory, and that begins really your last call is 20,100, and I'm going to base the last call off of the wick where we just couldn't get above it. We couldn't get above it last week as well. We had a really nice fat rejection off of 20,200. 20,200 is your last call for more upside once NQ breaks and holds above 20,200, and we would look for that specifically on the 1 hour. We can probably attempt to see 20,600. Very, very possible reality, given especially that ES is making new all-time highs, yet NQ is still kind of figuring itself out here. Now, again, in terms of downside, I do have to break this down to the smaller scale because it doesn't tell us much that, oh, if we're below 20,030, then we might come down to 19.5. What about the levels in between? So let's take a look at that. And really your 20-day on the 4 hour is 19,900, and we had a nasty spill to it on Friday only for us to recover it all and a bit flat. So I would say if 19,900 this week decides to break down, that would expose us down to definitely 19,700, 19,000 680. I remember that was a big beefy level for us. Below 19,680, I mean, you're coming down to the supports of 600, and below 600 you can even see possibly 520. So that can become a very real possibility. And again, I say that's going to start if and only if on the intraday we begin breaking below 19.9, and so long as the 1 hour candle can stay below 19.9, you're going to see us spill a bit over. Something I've been keeping an eye on also is volume. I've been noticing that through the low grinds to the upside, when the volume begins to pick up, we begin to pick up in sell orders. Let's see if that would be the case for this week. Let me see on the 1 hour if I expand this. What is it going to show me? So let's see. Volume picked up on a spike up, spike down. That doesn't tell me anything. Volume picked up again on this push to the upside that we had towards 20,200. And then the next time we picked back up to a similar area was when we began to sell. So volume is not really telling me much here yet. I guess this is going to depend on, are we going to break down now below 19,900 and then stem us down towards 19.7, 19.6 as this base support, 19,520, and bounce off of it? Or are we going to have enough strength into this week to, again, reclaim 20,030, get us above 20,100, and the clean breakout, the textbook breakout setup there is 20,200, so long as the 1 hour candle can close above 20,200. That's then going to give us room all the way up to 20,600. Other than that, there's really not much to nitpick from here. Um, I would just be very careful on the intraday side of things. I would be very careful during the week, especially with some of the news that we have coming out. And again, September seasonality, before it gives you the move, it's going to dance a bit up and down, up and down. So, you know, sometimes I understood a little bit too late into this month personally, but cash is a position too. You don't have to quite throw out those shots, or if you do, you better be quick. You better be quick with your points, especially when we're kind of in between this range. For example, 20,200 and 19,900. Another way you can play this is you buy the bottom end and you sell the top end of this range until you get a breakout or breakdown. The problem with that is you're falling, well, at least my problem with it is I'm falling into the category of timing. When I begin to time it, that's kind of when things fall apart. So I want to be a little more cautious with executing, especially into this week. But again, gun to my head, looking at this with kind of clear eyes, I would be bullish here. I would be on a dip. Give me a nice sizable dip at first, but I'm still bullish. This doesn't quite scare me. Again, maybe this week we begin to see a bit of a selling pressure just to retest some of those supports, solidify some of those supports that we broke out of and kept toying with last week. And if we can prove to hold above them, wonderful. We have our game plan into October, and again, things will pick back up. I say second week of October to November, where we get a little more steady trend and direction, where it's a little more easier for us to flow through. But with that said, that is all she wrote. I hope you have a solid trading week ahead. I'll catch you on the next one. Cheers.